Bitcoin stands at a pivotal moment that could define its trajectory for the remainder of the year and potentially set the tone for the broader digital asset class well into the future, as the leading cryptocurrency finds itself at a genuine breaking point, clinging tightly to the psychologically and technically significant $60,000 support level, while the entire crypto market awaits what could prove to be an explosive resolution in either direction. Recent price action has placed Bitcoin in a precarious position following a sharp correction that saw it touch lows around $59,099, the weakest print since October 2024, representing a weekly decline of approximately 16% that triggered widespread liquidations exceeding $2 billion across perpetual futures and spot markets alike. This development has left traders and observers on edge, with the $60,000 threshold now serving as the immediate line in the sand whose defense or breach will likely dictate short-term momentum and influence sentiment across equities, commodities, and risk assets more broadly. Welcome to Crypto Hub, your trusted source for professional, in-depth cryptocurrency market analysis and news updates delivered with clarity and balance. In this comprehensive report, we examine the current standoff at the $60,000 support, unpack the multiple converging pressures that have brought Bitcoin to this critical juncture, assess the technical and on-chain landscape, and outline the plausible scenarios that could unfold in the coming sessions and weeks. Our objective remains straightforward: to equip you with a clear, evidence-based understanding of developments so you can follow the market with greater context and perspective. Over the past several days, Bitcoin has traded in a compressed range just above the $60,000 mark, with intraday swings between roughly $60,500 and $62,500, reflecting a classic battle between dip buyers stepping in at perceived value and sellers probing for further weakness. This consolidation follows a bruising stretch in which the asset lost more than 15% in a single week amid record net outflows from United States spot Bitcoin exchange-traded funds, softening equity markets, and heightened geopolitical uncertainty. Market data indicates that the $60,000 level has been tested repeatedly in recent sessions, with the price managing to hold above it for now, although the proximity to this round number support continues to generate significant attention from algorithmic trading systems, options desks, and leveraged participants whose positioning could amplify any decisive break. The broader crypto ecosystem has mirrored this caution, with total market capitalization contracting and altcoins experiencing amplified percentage moves as liquidity thins and speculative appetite temporarily recedes. The $60,000 support carries outsized importance for both structural and behavioral reasons that have been reinforced across multiple market cycles. On a technical basis, it coincides closely with the 200-week moving average, a long-term trend indicator that has historically acted as dynamic support during corrective phases and has only been breached meaningfully during the most severe bear markets of the past decade. Round psychological levels, such as 60,000, also function as magnets for order flow because they attract clusters of stop-loss orders, option strikes, and liquidation thresholds, creating self-reinforcing mechanics once price approaches. Historically, Bitcoin has interacted with the 60,000 zone during the 2021 bull market peak, the 2022 bear market capitulation, and the 2024 recovery phase, each time producing memorable reactions that shaped subsequent narratives. A sustained hold above this level would preserve the higher-low structure established in prior months and keep the longer-term uptrend technically intact, whereas a clean break lower could shift focus towards secondary supports near $57,000 and $55,000, where additional volume nodes and historical demand zones reside. Multiple fundamental and sentiment-driven forces have converged to place Bitcoin at this breaking point. Record outflows from spot Bitcoin ETFs have removed a major source of consistent buying pressure that had supported prices through much of the prior year, with net redemptions reaching multi-billion-dollar levels in recent reporting periods as some institutional allocators rebalanced or reduced exposure amid broader risk-off conditions. Corporate treasury activity has added another layer of supply consideration, with reports indicating that prominent holders such as MicroStrategy engaged in selling for the first time in several years, an event that reverberated through order books and social sentiment channels even if the absolute quantities remained modest relative to daily volume. Geopolitical developments, particularly tensions involving the United States and Iran, have injected uncertainty into inflation expectations and global growth forecasts, prompting investors to reduce exposure to assets perceived as higher risk, including cryptocurrencies that remain correlated with technology equities during stress periods. The Nasdaq 100 and broader equity indices have themselves come under pressure, illustrating the tight coupling that has developed as Bitcoin matured into a macro-sensitive asset class. Post-halving cycle dynamics also play a role. Although the April 2024 supply adjustment initially fueled optimism, historical patterns show that the second year following a halving can feature extended consolidation or corrective phases as the market digests prior gains and awaits fresh demand catalysts. Technical indicators currently paint a mixed but cautious picture that underscores the tension at the $60,000 level. On daily and 4-hour charts, Bitcoin has formed a series of lower highs while respecting a descending trend line, consistent with a short-term bearish pennant or channel structure that often precedes either continuation lower or a sharp relief reversal once selling exhausts. The price has traded below the 50-day moving average, confirming near-term momentum has tilted negative, while the relative strength index on lower timeframes has repeatedly entered oversold territory, a condition that in past cycles has preceded short covering bounces even when the larger trend remained under pressure. Volume analysis reveals elevated activity during the decline, much of it attributable to forced liquidations rather than organic distribution, which can sometimes mark local exhaustion if follow-through selling fails to materialize. Key resistance zones to watch on any upside attempt sit at 62,500, 65,000, and then the more substantial $68,000 to $70,000 area where prior support turned resistance and moving average clusters converge. A decisive daily close above 62,500 with expanding volume would represent the first meaningful shift in structure and could trigger algorithmic buying programs that accelerate a recovery. On-chain metrics offer a complementary lens that tempers pure price-based pessimism while highlighting the stress the network is absorbing. Long-term holder cohorts, defined as addresses holding coins for more than 155 days, have shown continued accumulation or at least limited distribution during this pullback, a behavior historically associated with informed participants viewing dips as opportunities rather than reasons to exit. Exchange reserves have not seen dramatic spikes that would indicate panic selling onto centralized platforms, although any sustained increase would warrant closer monitoring as a potential capitulation signal. The Bitcoin hash rate remains near all-time highs, demonstrating that miners continue to secure the network despite compressed margins for higher-cost operations, which provides a baseline of fundamental health even as price corrects. Large transaction monitoring reveals heterogeneous whale behavior, with some entities redistributing while others appear to be absorbing supply at current levels, suggesting the market has not yet reached uniform despair. These on-chain observations align with a market that is under pressure and experiencing deleveraging but has not yet entered the full capitulation phase seen in prior cycle lows, implying that the resolution of the current standoff may hinge more on external catalysts and sentiment inflection than on organic supply exhaustion alone. The macroeconomic backdrop continues to exert significant influence over Bitcoin's near-term path. Tightening financial conditions, persistent questions around inflation trajectories, and fluctuating expectations for monetary policy adjustments have all contributed to reduced risk appetite across asset classes. Bitcoin's correlation with equities, particularly growth-oriented indices, has remained elevated during this episode, meaning that any stabilization or rebound in traditional markets could provide immediate tailwinds, while further equity weakness would likely weigh on crypto as well. Global liquidity conditions, cross-border capital flows, and the relative strength of the United States dollar also factor into the equation, as a stronger dollar environment has historically coincided with pressure on non-yielding assets, such as Bitcoin. Regulatory developments worldwide remain a wildcard. Incremental clarity or new institutional frameworks in major jurisdictions could serve as positive catalysts, whereas prolonged uncertainty or restrictive measures could extend the current risk-off posture. For the wider cryptocurrency market, Bitcoin's dominance tends to rise during periods of stress as capital rotates toward the most liquid and established asset, which can produce underperformance in altcoins even when Bitcoin itself holds relatively steady. Two primary scenarios dominate forward-looking discussions among analysts and traders as the market awaits the explosive move that a break or defense of $60,000 would likely trigger. The constructive case rests on the support holding, potentially aided by a reversal in ETF flows, positive macroeconomic surprises, or de-escalation in geopolitical hotspots. Under this path, Bitcoin could experience a swift relief rally that reclaims $65,000 and then challenges the $70,000 to $72,000 zone, with short covering and renewed institutional interest providing the fuel for a move that many would characterize as the start of the next impulsive leg higher. Historical analogs show that successful defenses of major long-term supports have frequently marked local cycle lows and preceded multi-month advances, particularly when accompanied by improving on-chain fundamentals and stabilizing traditional markets. Proponents of this outlook point to Bitcoin's structural scarcity, expanding corporate and sovereign adoption narratives, and the maturation of market infrastructure through regulated products as enduring supports that could reassert themselves once near-term headwinds subside. The alternative scenario envisions a decisive breach of $60,000 that unleashes mechanical selling from stop orders and over-leveraged positions, potentially driving price toward $57,000 or $55,000 in relatively short order. Such a move could extend the corrective phase, test the conviction of remaining holders, and produce a more prolonged period of range-bound or lower price action consistent with certain post-halving historical templates in which maximum pessimism precedes the next expansion. Sustained ETF outflows, additional corporate distribution, or adverse macro data could reinforce this path. While painful, advocates of this view argue that a deeper flush could ultimately clear excess leverage, reset sentiment, and establish a more durable base for the second half of 2026 and into 2027, with some forward-looking models even contemplating tests as low as the low $50,000 area before cycle recovery gains traction. Prediction markets have reflected this uncertainty, with meaningful probabilities assigned to both further downside tests and eventual new cycle highs later in the year. Throughout this period, it remains essential to recognize that cryptocurrency markets operate with inherent volatility and are subject to rapid shifts driven by news flow, positioning changes, and external events that can override technical or on-chain signals in the short term. The current test at $60,000 represents far more than a single price level. It is a collective assessment of market resilience, institutional commitment, and the balance between supply and demand after a significant run-up and subsequent correction. Participants monitoring the situation are focusing on several concrete data points in the sessions ahead, including daily ETF flow statistics, on-chain accumulation or distribution metrics from major cohorts, equity market breadth and volatility readings, and any geopolitical or policy headlines that could serve as immediate catalysts. Position sizing, clear risk parameters, and avoidance of excessive leverage are themes repeatedly emphasized by experienced market observers during such inflection points, as the potential for sharp moves in either direction increases the importance of disciplined capital allocation. As Bitcoin navigates this decisive phase at the $60,000 support, the crypto market stands at a genuine crossroads where the next sustained move could reshape narratives for months to come. Whether the outcome manifests as a powerful upside breakout that restores bullish momentum or a further leg lower that extends consolidation will be determined by the interplay of the technical structure, fundamental flows, and shifting sentiment in the immediate future. Here at Crypto Hub, we remain dedicated to providing timely, objective, and professional coverage of these developments, so you can stay informed as the story continues to evolve. Thank you for joining us for this detailed market update. We appreciate you spending time with Crypto Hub and encourage you to subscribe for ongoing analysis of Bitcoin, the wider cryptocurrency landscape, and the macroeconomic factors that influence digital assets. Stay informed, approach the market with discipline, and we look forward to bringing you the next update soon. This has been Crypto Hub.